you ever wondered how to measure disorder in the market to anticipate whether predictable moves or total chaos is coming? Well, today we are going to take a look at the indicator, information theory market analysis. This tool applies information theory principles such as entropy, which basically measures the disorder of prices and volumes. Its purpose is to tell us what the current market environment is. It clarifies if we are in an orderly trend that we can trade or if we are in a stage of total disorder where it is better not to risk. Imagine being able to distinguish between a market in a healthy trend and one that is simply moving chaotically. That is exactly the gap this indicator aims to fill. This indicator transforms market randomness into actionable data. Using the power of entropy, the same concept in physics that measures disorder, this indicator not only tells you whether the market is rising or falling, but also reveals the quality of that movement. Is it a solid, predictable trend or simply chaotic noise? When you add the indicator in TradingView by searching for Information Theory Market Analysis, you will see that the indicator window is crossed by three main lines, each with a unique function and color code. First, the dark blue line, price entropy. This is the main compass. When this line stays in low territory, it tells us that the market has a clear direction and is in trend mode. But when it shoots up, it's a warning that the price is becoming erratic and chaotic. Next, the light blue line, volume entropy. Think of it as the companion to the previous one. It tells us whether the volume accompanying price movements is orderly or disorderly. Its crossover with the dark blue line is key. When the light blue volume line crosses above the dark blue one, it may be warning us of a distribution phase where big money is starting to move positions. The purple line, the MACD of entropy, measures the difference between price chaos and volume chaos. When it is well above zero, it means that price is much more chaotic than volume, a sign of weakness that usually appears at reversal points. When it is well below zero, it indicates that volume is more chaotic than price. These chaotic volumes usually signal that large investors are moving positions sharply, which often happens before a major trend reversal. And we cannot forget the area shaded in royal blue, the SEMM. This is perhaps the most powerful concept, market momentum. It is not just another line, it is a zone. When this area is thin and stays close to the base, it is like the calm sea. The market is predictable and trending. But when it expands and grows, it's like a storm brewing. It warns us that the market is becoming unpredictable and chaotic, where trends die and noise dominates. Its potential lies not in looking at each line separately, but in observing how they dance together. Their interaction tells us the whole story of what is really happening in the market. The indicator panel gives us a quick overview of all values. The most important of all is the SEMM parameter, which measures how chaotic or orderly the market is. The optimal values for trading are 0.2 or less. If the SEMM exceeds 0.2, it is recommended to avoid trading because the market enters a zone of randomness where signals lose reliability. Remember this simple rule. If the value is 0.2 or less, it is a tradable zone. The market has a trend. If it is between 0.2 and 0.5, it is a risk zone. It is better not to trade. And if it exceeds 0.5, it is total chaos, danger zone. Do not trade. A simple strategy with this indicator is to trade the crossovers between the purple and blue lines, hiding the volume line for clarity. To buy, you need the SEMM to be below 0.2, the market state to show trending, the trend bias to be bullish, and the purple line to cross above the blue line, placing the stop loss below the last low. To sell, the same SEMM and market state conditions are required, but with trend bias bearish and the purple line crossing below the blue line, placing the stop loss above the last high. Remember, without the SEMM filter below 0.2, no signal is reliable. This strategy allows you to trade only in markets with a defined trend.